Wondering how the stock market is going to do in 2026? Let's cut through the noise out there and talk about some real data. These large AI companies are expected to increase capital expenditures by 30% in 2026 to $520 billion. Simply put, that's a lot of spending on the economy. This can potentially fuel double-digit corporate earnings growth for the S&P 500. Number two, the Federal Reserve is expected to cut interest rates in 2026. This can make auto loans cheaper, mortgages, business loans, and many other stimulating things cheaper. But Marcus, the stock market is already at or near an all-time high. The S&P 500's performance after interest rate cuts when the S&P 500 is already at or near all-time highs historically, positive 13% on average 12 months later. But what about tariffs? Surprisingly, profit margins have been increasing with the S&P 500 despite tariffs. More on that in a separate video. But we have already had 3 straight years of growth. The S&P 500 averaged 12.8% gain historically during the fourth year of a bull market since 1950. Bull market is a fancy term for a period when stocks are rising. Want to hear a more pessimistic view? Check out my page for that separate video.